Are your business expenses really tax deductible? Or are you setting yourself for trouble? In this video, I'll show you exactly what the IRS looks for when it decides whether an expense counts, how ordinary and necessary expenses actually work in real life, and the simple way to document your decisions so they hold up in an audit. Hi, I'm Pietro Canestrelli. I used to work as an IRS attorney in Washington, D.C., so I've seen firsthand how the IRS operates. If you're dealing with tax issues and need guidance for someone who understands the system, give us a call at 951-319-7674 for a free consultation. Let's start with the two words that control most every business deduction: ordinary and necessary. Ordinary does not mean every business buys it. It means the expense is common and accepted in your specific line of work. If you're a consultant who travels to meet clients, airfare and lodging are ordinary because that's how people in your field regularly deliver the service. Necessary does not mean your business would crumble without it. It means the expense is helpful and appropriate for your work. You may not need the newest software to survive, but if it measurably improves efficiency or client service, it can be necessary. Now, here's where people get into trouble. They assume that if something benefits the business in any way, it's deductible. That's not how the IRS sees it. Personal spending dressed up as business, luxury items that are out of proportion to your industry, and purchases that are only loosely connected to revenue all raise red flags. First-class flights to routine meetings, designer items you call uniform, or high-end entertainment that isn't directly tied to a clear business purpose will get extra scrutiny. The standard the IRS applies is reasonableness within your trade or profession. If it looks lavish or unrelated, expect questions. So how do you make the gray areas clear? You build the business purpose into the expense at the moment you spend the money. That starts with intent. Before you buy, ask yourself why this purchase helps you do your work better, faster, or more profitable. Then capture that why. On the receipt or in your accounting notes, write who it was for, what the meeting or project was, and when and where it happened, and why it was necessary for your business. The IRS isn't just checking for a receipt, it's evaluating whether your rationale lines up with how your industry normally operates. Let's apply this to travel. Coach airfare to meet a high-value client, a reasonable price hotel near the meeting, and local transportation tied to the itinerary are all consistent with ordinary and necessary. Upgrading to first class because it's more comfortable is not automatically disallowed, but if it looks excessive against your industry norms and your company size, it's harder to defend. When in doubt, lean towards reasonable choices and make the business purpose obvious in your notes. If part of a trip is personal, split the costs. Keep the business days and activities documented and do not try to write off the purely personal portion. Meals are another area the IRS studies closely. A meal with a client or prospect that directly relates to a business discussion can be deductible, but entertainment is generally not. That means the game tickets or the concert itself usually won't qualify even if you've talked about business there. Keep your support simple and specific. Note who was there, what you discussed, and how it connects to revenue or retention. Avoid vague descriptions like networking or relationship building. Tie the meal to a project, a proposal, a renewal, or a defined business objective. Technology and tools follow the same logic. If software or equipment helps you deliver work or manage operations more effectively, it can be ordinary and necessary. But timing matters. Some items must be capitalized and recovered over time rather than deducted all at once. If it's a significant, longer lasting asset, plan for depreciation or an election that fits your cash flow and your growth plans. The point is not to force everything into a current deduction. The point is to match the tax treatment to how the asset actually benefits your business. Home office and vehicles are classic mixed-use traps. The IRS expects exclusivity for a home office and true business miles for a vehicle. If a space is used regularly and exclusively for business, say so in your notes and keep photos or a simple layout on file. For vehicles, a clear mileage log that shows the date, destination, purpose, and miles turns a gray area into a defensible deduction. You don't need to overcomplicate it, but you do need to be consistent from the first week of the year, not the last. Now let's talk about what to avoid. Don't try to stretch personal lifestyle upgrades into the business column. If it's primarily personal with a thin business story attached, it will look that way on audit. Don't assume that because a competitor posted something on social media, it's proof their expense was deductible. You're not looking for clever ideas to justify spending. You're aiming for clean, credible decisions that match your industry and your financial reality. If you're wondering how this plays out under pressure, picture an IRS agent asking two simple questions. Is this the kind of thing businesses like yours normally buy? And does your documentation show it helps you do business? If you've kept your choices reasonably, captured the business purpose, and separated personal use from business use, those answers become easy. If not, you end up arguing judgment calls without evidence. That's a position you can't avoid with a few habits you repeat every month. Before we wrap, here's a simple workflow you can start using today. When you plan a purchase, make a one-sentence business purpose and save it with the receipt. When you travel, build the business itinerary first and keep your confirmations together so you can show why the trip existed. When you take a client to a meal, write down who, what, and why before you leave the table. When you buy tools or equipment, decide up front whether it's a supply you'll use up soon or an asset you'll use over time. Then book it the right way. And when anything is mixed between personal and business, split it honestly and keep the method in your notes. Follow that rhythm and you won't have to memorize tax code sections. You'll think the way the IRS evaluates: ordinary for your field, necessary for your work, reasonable for your size, and documented in real time. If you're unsure about a deduction, facing an audit, or want a second set of eyes on your bookkeeping before tax season, call the law office of Pietro Canestrelli at 951-621-8125 for a free and confidential consultation. We'll review your expenses, separate what's solid from what's risky, and set up simple documentation habits you can keep. If you want to know more about tax law, watch the next video.